Aman recently graduated from college and got hired for a new job via college campus placement. He received his offer letter and is now about to start his career. Aman reached out to his friend Sudhir, showed him the offer letter, and sought some guidance on tax and investments. Sudhir was happy to share with him some information on income tax. Sudhir explained to Aman about the different types of taxpayers by stating that the Income Tax Act 1961 has categorized different types of taxpayers: individuals, Hindu undivided family, association of persons, body of individuals, firms, and companies. Aside from those types, the Income Tax Act 1961 has categorized the types of taxpayers based on their residency status: resident, resident and ordinary resident, resident and not ordinary resident, non-resident. Sudhir further explained that the resident Indian category are further divided based on age groups: individuals under 60 years of age, individuals aged more than 60 but less than 80 years, individuals aged over 80 years. Sudhir then explained Aman that he falls in the individual type of taxpayer under 60 years of age category. Sudhir further explained some of the general points about income tax. Depending on the taxpayer type, each of these taxpayers are taxed differently. Individual, Hindu United Family, Association of People, and Body of Individuals taxpayers are taxed based on their income slab, whereas businesses and Indian companies have a fixed rate of tax computed on their taxable profits. People's earnings income are classified into tax brackets or tax slabs where they are taxed based on the slab they fall in, and the tax rate varies according to the tax slab. The rate at which income is taxed rises in direct proportion to the income. Sudhir explained Aman that as per the Income Tax Act 1961, the sources of one's income could be divided into 5 categories: income from salary, income from house property, income from business profit, income from investments, capital assets, and income from other sources. Sudhir asked Aman, "So can you guess which type of income tax you would be paying?" Aman replied, "Yes, the tax that I would be paying would be for income from salary." Sudhir said to Aman, "Let me also explain to you a little about the other income categories. Income earned from renting a house property is taxable under this head of income. Profits earned by people or professionals who are self-employed or run their own businesses are taxable under this head. Profit from sale of capital asset like land, shares, jewelry, house property is taxable under the head capital gains. Income from sources other than mentioned above, like earnings on bank interest, fixed deposits, lotteries, etc., is taxable under the head of income from other sources." Next, Sudhir explained to Aman that there are 4 types of income tax payment mode, namely tax deducted at source, where the payer deducts the tax right at the time of making payment to the recipient of income, like that of a salary; advance tax, where the tax is paid in advance when the income tax liability exceeds a certain amount; self-assessment tax. This is the tax amount calculated after reducing the advance tax and TDS from the total income tax liability; e-payment facility. For all taxpayers with internet banking facility can pay advance tax, self-assessment tax online. Aman then asked Sudhir, how can one file income tax returns? Sudhir replied, "Every year you must file income tax returns using the income tax return forms specified by the Income Tax Department. Here is information about some of the ITR forms. ITR 2 is for salary, pension, rent from more than one property, capital gains, brought forward capital losses from previous years, and income from other sources. ITR 3 is for salary, pension, capital gains, income from other sources, and income from firms. ITR 4 is for sources of income in ITR 3, income from business, profession, income from small business owners, less than 60 lakhs a year. ITR 4S is for income from small business owners less than 60 lakhs a year. Filing of income tax return online has been made mandatory for all classes of taxpayers barring few exceptions. One can create an account at www.incometax.gov.in and use the various income tax return forms available to file the return. The Income Tax Department now offers various ITR e-verification methods to complete the process. Next, Sudhir explained to Aman about a very crucial aspect in tax filing: Permanent Account Number, also known as PAN. PAN is a 10-digit alphanumeric number issued in the form of a laminated card by the Income Tax Department. A PAN number always is a mix of alphabets and numeric, as shown in the sample. It is mandatory to quote PAN while filing income tax returns or for any correspondence with any income tax authorities. Aman, after learning about the basics of income tax, thanked his friend Sudhir and told him that this will help him to plan his tax effectively.